Alright guys, now that we've got the theory covered behind reversal patterns, or price action patterns rather, we can now look at applying it into the market. Okay, so the first thing I want to show you, I am on gold on a daily time frame, and I want you guys to see something. So one of the patterns that we like to use at FX Code, because of how often it plays out, is a double top. Okay, so I'm going to start here on a gold on a daily. You can see that gold was very bullish, okay, and then it was bearish, and then it was bullish. Okay, so this momentum, when it pushed up again, gave us a double top. Okay, and now those of you who don't know, a double top is a sign of a reversal pattern. So this could show us that if we get a double top, price could reverse, and look what price did, it reversed. Okay, so this is a classic example of a reversal pattern where price gives us a double top, and it then even a double top, double bottom, they both mean different things, but they ultimately do the same thing, either push the upside or to the downside. And you can see here we had a double top on gold, and gold pushed nicely to the downside. So I want you guys to see here that on gold I have highlighted a bearish trend on a daily time frame. Okay, obviously we have a swing high, push below. In the other videos of impulse and correction, I've explained this. We impulse down, we correct, we impulse down, we correct, we impulse down, we correct. So because we are making lower lows and lower highs, we know we are in a bearish trend. So going back to the patterns that we just looked at, what should we be looking for? Again, I will jump down to a lower time frame. So here we have gold on this pattern. Okay, so remember in the examples it said it can apply to the start of a new trend as well as trends in trends, right? I hope you guys remember that. So the overall trend that we have here is bearish, obviously, because we're declining down. So obviously we should be looking for selling opportunities. But I want to show you guys something here. So we have trends in trends. We have the bearish, we have the impulse. So these are small bullish corrections that occur in the market, right? And this is where trends in trends plays a massive part. So you can see I've identified this bullish trend within the major bearish trend. So this is short-term buys, long-term sells. Okay. And I want you guys to see, remember in the examples I said to you that at the bottom of a trend line, we should look for reversal patterns. So the next pattern I want to introduce you to on a 4-hour time frame is an inverted head and shoulders. Okay, inverted head and shoulders is exactly what it sounds like. It is where price goes from making higher highs and higher lows to lower lows. Right, so you can see here on the left hand side I have head and shoulders, right, and you can see on the left here we push down, we come back up, we push down, we push up, we come down again. So you can see that price shifted from making lower highs, lower lows, to higher highs, higher lows. So this is a perfect example of an inverse head and shoulders. Head and shoulders can be applied both inverse and normal. So I'll show you guys an example quickly. So we have this head and shoulders here on a gold time frame, on a 4-hour time frame on gold, sorry. So if you look at this, I'll start on the head and shoulders somewhere here. So we have the left shoulder, we pull up, we have the head, we have the right shoulder, and we have the continuation, which is exactly what we need to look for in terms of gold. Okay, so this is on a 4-hour time frame. This is a reversal pattern. Okay, why is it reversing? Because we're at the bottom of a bearish trend, meaning we should now have a correction, right, to have the continuation to the downside. So this is a bullish trend within a bearish trend. So the overall direction is still bearish, but this is a reversal sign that price has finished pushing lower for now and looks to correct or reverse to the upside before then continuing to the downside. So this is an example of a head and shoulders. There's so many ways that it can be applied. They can be applied on different angles, on different slopes, etc. So the next one I'll show you, I'll just draw an example a bit better. Right, so of course the market does not follow the textbook, so it is harder to see sometimes, but that is basically the head and shoulders that we have, right? It can vary to how it is applied, as long as there is a shift between price making lower lows and lower highs to higher highs and higher lows. That is a reversal pattern of an inverted head and shoulders. Okay, but likewise, a head and shoulders can be applied to sell. Okay, so this is the inverted head and shoulder to buy. So I want you guys to remember that if the shoulder is inverted like this, okay, this is a reversal sign to look for buys. Why? Because price pushed down, right? It gave us a lower low, a lower high, another lower low, okay, but then we shifted. Okay, so sometimes the right shoulder, where it ends, is somewhere, for example, up here. Okay, this now gives us a higher high and a higher low. I'm hoping you guys can see that. So we shift from making lower lows and lower highs to making higher highs and higher lows. And that is how price moves. And that is basically what a reversal pattern is. It's a shift on price making a change of structure. So this is an example for buys. Let me show you an example quickly for sells. Okay, so again, we have head and shoulders where price goes from making higher highs and higher lows to making lower lows and lower highs. Okay, so this is a different shape. I'm hoping what I'll do is I'll draw this so that you guys can see what price is doing. Okay, you can see that price is constantly making higher highs and higher lows, and now when price reverses, giving us a reversal pattern of a head and shoulders, price pushes down and starts doing this, okay, giving us lower lows and lower highs. I'm hoping that makes sense. If it doesn't make sense, please rewatch this lesson and just see what it is maybe you're not understanding. But that is basically the easiest way that I can explain to you what an inverted head and shoulders is. Okay, it's literally just a shift in structure. Okay, so now we've learned inverted head and shoulders. So for this example, inverted head and shoulders, but we now have the reversal pattern in play plus a bullish continuation pattern or a bullish pattern. So it can be one or the other. On a 4-hour time frame, it is still evident where price corrected. Okay, I want to be very, very clear. Price corrected, giving us a bullish flag. A bullish flag is another example of how we can trade a continuation pattern. This is merely just price making a higher high, a higher low, and then continuing, but it is forming within a channel. Okay, so in the previous lesson, I spoke about continuation, impulse, correction. The correction is this flag. Okay, and this flag is a continuation pattern to continue pushing to the upside. It is a bullish pattern. It can be both bullish and bearish, okay, depending on the market situation. So now we've identified this move. We push the upside. We either have an entry on the head and shoulders or we have an entry on the break of the flag, right? So therefore, we have now got two confirmations to enter this trade on top of the other confirmations of we've bounced off for support. We've got bullish engulfing on the chapter where we focus on candlesticks. Bullish engulfings tell a really good story. Bonus tip. Bullish and bearish engulfings are only valid at support and resistance. They should not be applied halfway through the trend. So for example, this candle here, right, this bullish candle, it's not a bullish engulfing because it's smaller, but it's not at a support level, right? So this support level that we spoke about was the support level evident on a daily time frame. Okay, I know I don't want to go into too much detail, but I just want to show you here quickly that this is that support level. That is why we consider this bullish engulfing valid, because it has come off a level of support. Okay, I'm hoping you guys can see that. Right, so we have the bullish liftoff. We have now a correction or a continuation, which we know is a bullish flag. I'll put an example on the screen of what a bullish flag looks like, and then we go from there. Okay, so now we've identified this push to the upside. We get there. Now we reach the top of our resistance. Now we are getting introduced to another pattern. Okay, this will look very, very familiar, but very, very similar to the double top. This is what we consider a triple top. A triple top is a sign of reversal. You get a double bottom, double top, triple bottom, triple top. Okay, they all follow the same section. So double bottom, you're looking for buys. Double top, you're looking for sells. If you think about it this way, if you're at the bottom, you're looking to go up. If you're at the top, you're looking to come down. That is how they can be applied. So I want you guys to see that we have 1, 2, 3. Okay, so this is a reversal sign that prices cannot push above this level. Okay, and when it does push above this level, it is a fake out to catch people on the wrong side of the market, right? So we could even look at this, ignore this top here, and look at these wicks as 1 top, 2 tops, 3 tops. Okay, and the reason I say these 3 tops are valid is because of the trend line. So price wanted to retest that trend line before pushing to the downside, which is really, really good because it just confirms to us that this triple top is valid. Okay, so if I just draw this so you guys can see, we have 3 touches, 1, 2, 3, break through and then push below. So this is a classic example of how to trade a triple top. Okay, and that is another reversal pattern. Likewise, you get a triple bottom where, for example, price could continue pushing lower. At a support level, we now do this. Okay, we either do that, giving us a double bottom, which is a reversal pattern, okay, or we push to the downside, giving us not one, not two, but three touches before moving to the upside. So you can see how they work exactly the same, right? And the same for a double top. So if we push up and price gives us a double top, we know to look for sells, and likewise for the triple top, we can apply the same theory to that as well. We push up, price gives us a triple top, and then pushes down. Okay, this just signifies that price is failing to make new highs, which shows us that the bullish or bearish momentum is finishing, depending on if you're buying or selling. Okay, another thing I want you guys to look at, these reversal patterns are only valid when they are near a support or a resistance. Okay, this is very, very key. You cannot trade a double bottom if you're nowhere near support. Okay, so for example, you could look at this as double bottom. Okay, this is not a support level that you should be looking at. The double bottom is the start of a new trend. We're already halfway through a trend at resistance, so therefore this double bottom is not valid, unfortunately. Okay, so next I'll go into some more detail on bullish and bearish flags. Okay, so I haven't found an example of a bearish flag right now, but I have an example of a bullish flag which looks like this. So the next thing I want to show you guys is a bearish flag, or what price could potentially do, right? So we see a push to the downside, and then we start correcting. Okay, the correction is what we call the flag, which is a continuation pattern, right? So we could look at this as, okay, we have a correction here. I'm just going to bring this down just to make it a little bit more sense, right? And I want you guys to see that it is exactly the opposite of a bullish flag. So a bullish flag, it corrects to the downside, okay? It corrects down, okay? Where a bullish flag corrects to the upside before pushing. So that is one of the key characteristics of when you should look for, right? You should not be looking for a bullish flag in a bearish trend. You should not be looking for a bearish flag in a bullish trend. Okay, I want to be very, very clear. It is not how it should be traded. And these are the most common types of patterns that we at FX Gold use. There is literally hundreds and hundreds and hundreds of patterns out there, but we do not want to bombard you with the information. We'd rather give you the information of the information that is crucial and what happens the most in the market, okay? And that is literally how we trade them, and how we spot them, and how we trade as FX Gold. So our next question is, how do you trade them? Okay, so we're going to look at this head and shoulders, for example. I'm going to draw the head and shoulders again just so we can see it a bit clearer. So we have the left shoulder, we have the head, the right shoulder, and a continuation. Okay, so you might be thinking, Andy, how do we trade this? So there is two ways that we can trade this. Okay, now again, it is all relative to what you see on the market. There's no such thing as right, and there's no such thing as wrong. Okay, so the first thing I would look at is we have a resistance level here. Okay, you can see where price bounced, wiggled around, and then broke through, retested, and then fell again, which gave us the start of this head and shoulders, inverted head and shoulders, right? So if we had to take this trade back to here, for example, what do we know about support, or resistance rather? So at resistance, we need to wait for confirmation that price could reverse, or we need to see a break above and a retest. Okay, so for this example, if we have a head and shoulders like this, okay, this is such high confirmation because we've just bounced off a support level. I want to be very, very clear. This is such a high support chance of price bouncing off this level just because of the significance that it has. Okay, so how we trade this is, once we've identified this level, right, we wait for price to close above. Okay, and as you can see, it closed above very, very nicely. If I go to a lower time frame, this is what we consider a break retest. We cover that in 3.0. But if we break this level after an inverted head and shoulders, we know to buy. Because why is it inverted head and shoulders? It is a reversal pattern. Okay, so we put our stop loss just below the right shoulder. So I'm just going to move this so you guys can see. Right, I want you guys to see that the right shoulder ends here. Okay, but I put my stop loss just below. Okay, because we could put price here, but if it comes for a deeper retest and then continues up, we're going to get tagged out. So we put it where it makes sense for market structure to tag us out. So obviously if price pushes below, okay, price is no longer making higher highs and higher lows. It is now making lower lows. So this is a sign that this inverted head and shoulders has not played out. And yes, there is times where inverted head and shoulders and all of these patterns do not play out. There's no such thing as a 100% accurate strategy. I want to be very clear with you guys. Okay, so we put our stop loss just below the right shoulder. Okay, and we put our take profit at resistance. So we know that there's resistance here. We could have a potential resistance level somewhere here, right? But the nice thing is it lines up with this trend line. So we know now that this is a potential for price to reverse around this level. So if we play this through, we can now see that price ultimately does make higher highs and higher lows. Higher high, higher low, higher high, higher low. Why? This low is still higher than the previous one. This high is still lower than this one. So therefore this high is higher than this one. That is why it's called a higher high. Okay? So we continue, and you can see we hit take profit. And that is just by using this pattern of inverted head and shoulders and how we trade it. And it's about having the patience to hold this trade, because in a 4-hour time frame, price has not given us any indication that it is exhausted or going to look to push to the downside. It's literally done everything that we're looking to do. Like I said, with the inverted head and shoulders, price moved from making a lower low and lower high to a higher high and a higher low. And that is what price ultimately keeps on doing. Okay, you can see, like I said, this high is higher than this high. This low is lower than this low. This low rather is lower than this low. So that is why it's called a higher low, because it is higher than the previous low. And that is what price does. Price does not move in a straight line, guys. That people have this thing of, I'm going to enter and the price is going to move. It does not move that way. Okay, and ultimately, just by knowing the rules of resistance, we know we have a resisting trend line, we have a target. So therefore, this bullish trend, we've caught it at the very beginning. You know, we could catch it here, but you're going off a whim that price is bouncing. But now, because you waited for this confirmation, you have such a high confirmation trade that there is no reason for you not to take it. So I want you guys to see how, I don't want to say how strict we are, but how high our standards are with the trades that we take. We're not taking trades every single day. We're not taking trades every hour. You know, sometimes I can go a week and I've only taken 4 trades, but those 4 trades have paid my bills. So what is the point of taking more? Rather stick to quality over quantity. Okay, so now we've just discussed the entry for head and shoulders, right? So now, how do we trade a bullish flag? So, for example, if you don't see a bullish flag there, or inverted head and shoulders, you can maybe see this flag that I'm talking about. So we can see here that we have the impulse, the upside, we have the correction. Like I said in the other lessons, if we impulse up, we should be looking for continuation. This is that continuation pattern, which is a bullish flag or a continuation pattern, whichever you want to call it. Like I said, bullish flags are correcting to the downside, not to the upside, to the downside. Okay, so how we trade this is basically, if we've identified this channel that price is moving within, if we break this channel, right, we know that we have 2 confirmations that we can look for here. Okay, so number 1, if we break this channel, we can enter on that, right, with a stop loss, again, in the exact same place that it would be if you were using an inverted head and shoulders. Why? Because if price breaks above and pushes to the downside, price is no longer making higher highs and higher lows. It is now making lower lows and lower highs. Okay, so there's our entry number 1. Entry number 2 with this type of flag is on the break of the high. Okay, now you might be thinking, why would you trade a break of a high? Why? Because if we break a high, it means that we are making a new high, which means that we are in a bullish trend, which then shows us the overall direction that price is looking to make new highs. And that is very, very, very important. People don't understand that concept. If you see a bullish flag and you've missed entry, wait for the break of the high. You'll see that a bullish flag will break its correction a lot lower than the break of the high because of it corrects to the downside. Okay, I'm hoping that makes sense to you guys. Okay, so now we get to the top and we have a triple top. So how would we trade a triple top, Andy? Very, very simple. Same thing is applied. We have this resistance level. We have a triple top, right? And we have a triple top. We're looking for a sign of a reversal. The sign of reversal is happening at resistance. Why? Because we're at our resisting trend line. We're at a resistance level. So this is a good sign, a good place for a reversal pattern to happen, right? So this signifies the end of the bullish trend that we were in. So again, a triple top. You're at the top, so we're looking to go to the bottom again. A triple top again has 2 types of entries. It is the enter on the break. So for example here, right? This is one of the biggest stop losses that you guys can use. So right now I'm currently in gold sales as we speak, and I'm filming this on the 22nd of August, right? And this is where I'm targeting because we're at a reversal in the overall bearish trend for us to look for. So we have this triple top which has occurred, and we put our stop loss just above the previous ones. Why? Because if price pushes up, it's now making higher highs and higher lows. So I'm hoping you guys can see the connection between market structure and how to trade. Okay, market structure is very, very, very important. Okay, and market structure is just how it works. You might not know them as lower lows or lower highs. You might know them as bullish or bearish trends. But in bullish and bearish trends, we have what we call lower lows, lower highs, higher highs, and higher lows. Okay. So again, we break this, we break the low, we can now take this trade. Now, there is what we have as what we call a confirmation entry and a risk entry. So this is a confirmation entry for gold. Why? Because we've broken the low, we've taken out these lows, meaning price is no longer making higher lows, we're now making lower lows, because this low that we made is lower than the previous lows. So price is pushing to the downside. So this is what we call a confirmation entry. A risk entry is what we would consider somewhere up here. Okay, now there's two things that I want you guys. There is benefits to both, okay, but there is also a downfall to both. With the entry down here, I want you guys to see how big the stop loss is. Okay, your stop loss is almost double or triple what it would be at a risk entry, right? But by taking a risk entry, you're taking one less confirmation that price is pushing lower. So you're entering on the high at this resistance level. Okay, so I'm hoping that makes sense. It should make sense. If you've been taking notes and paying attention, it should be setting off alarm bells in your head, thinking, how did I not know this before? And that is literally the power of 3.0. What I've been brought in to do is to make things simpler for you guys. Okay, I want you guys to be very clear that the simpler you keep your trading, the better your trading will be. Do not overcomplicate these types of patterns. Again, if you need extra help or theory work on these patterns, at the end of this lesson, there will be a PDF file that you can download with this list of patterns. Okay, go through, read that theory again, go watch the video on theory, and then come watch this video again on how I apply that theory, as well as there is some more theory work in the PDF attached after this video. But that's all from me, guys. Thank you so much for joining. I hope you guys enjoyed this lesson. I will see you in the next one.